Hey there, it's Will. I thought I'd go through a little market analysis and show you a couple formulas and stuff you can do to find things you're looking for. I'm using TC2000, and there's a link in the description if you want to check out a free trial. And let's just take a look at the indices. So I mentioned before that we have some concerning issues, but there's also the fact that the market came down and sort of bounced off the 50. I mentioned in a previous video that, so on the negative side, we reach this high, we have a lower high, and then we come back down. So we have this down sort of trend here. We broke down through the 200 moving day average. We also went below the 8 EMA, which is what people call the T line, this black line. And so, but on the other side, there was this uptrend here. And then what happened was on Thursday, it broke the uptrend line here. You can see we came down below it. But because the 50 was kind of close to it, there was a good chance that it was going to come down and sort of test this 50. And you can see that we bounced off of it and we're coming up a little bit. We're still below the T line, the 8 EMA here. So, we're in this uncertain period of, right now where it's a bit flat. If we go to similar situations in other indices, so you have a lower high with the SPY, broke down through the 8 EMA, we broke through a trend line as well here, but then the 50 and the 200 are right there, so it looks like you can see it did bounce off. So when people say like the moving average doesn't, it's just, it's in the past, it's a lagging indicator. It's amazing. People do look at it, analysts and stuff, and people are looking at it to see what's going to happen. So it definitely, has its value in terms of just to see what's going to happen at those points. The Russell 2000, quite similar. Didn't quite break down the downtrend, but there's a lower high and it's kind of a little bit flat. This one did come above the T line, so we'll see what happens here. And then we have the NASDAQ, and this one's always been in a better situation, but there was an evening star pattern here, and then now we have a drop below the 8 EMA, but it's generally still on kind of a trend here, on the uptrend. And then the other thing is I've got this line at 237. If we go back to the high prior to the crash, that could serve as support now. So, we kind of broke up above it. Sometimes when you break above a high, it doesn't sustain, it comes back down and then it tests it again. So we have this bounce off of that resistance there, or support. So, that could be a support line for further up movement. I noticed that when you see some down some selling in the NASDAQ, you see gains in the other indices. There was, with Boeing and some of the positive news out there, in that sense, there was a sort of a shift of funds. And because NASDAQ is so high, people might be taking profits and moving them over to the value sort of quote unquote funds. So that's kind of my take. I think you can still find trades that are doing well in this area because there's not major selling right now. But I wanted to show that even with all this volatility over the past few months, especially in the tech industry, there's been some good steady stocks that are going up at a nice 45-degree angle for the most part. So I'll just click on a few randomly, but So I've got Watchlists. That's something in TC2000. It's really nice. You can have stocks in your watch list. You can sort of have a bunch of stocks that you're interested in. Then you can have another watch list where you sort of filter those even more. And you can have a series of them or different sort of topics, like different categories. So this one, I put a bunch of tech that are in a nice, pretty much a steady uptrend up until lately. So I'll just click on some of these. So you can see, like, generally speaking, because if you look at, like, I don't know, let's just click on some other ones. See here you have this up and down movement. So even though they've generally climbed, there's been a lot of ups and downs, and that's in the value, like the entertainment, leisure stocks, and stuff like that. So if you want something that's a little bit more, just simple and uptrend, like see this hubs. For the most part, you didn't have too much of a breakdown below. If you draw a trend line, you have a pretty good steady uptrend here. Some pullbacks where you could have potentially got in, bought some more. So I have a watch list where because you're looking for opportunities where it might pull back, like around here, and break through maybe a flat period consolidation. So that's one thing I wanted to show, is that even with all the craziness, there are stocks that you could buy and hold for the most part and get amazing returns on some of these techs. So I have quite a big list of stocks here. This is gaming, multimedia, so not everything went up and down and crazy. So if you look, there are definitely some steady type of stocks. But one thing I was going to show you with TC2000 is the formulas. You can make columns out of them as well, not just for scans, but you can put them in columns. So one column I have here is called, it's just the moving average of the exponential 8 divided by the one previous day. So X is exponential average, C is the close, so X average C, 8 is the 8-day moving average exponential. And you divide that by the same moving day average, but 1 day earlier. So you put .1. So that's a short form, just to say, divide today's moving day average by yesterday's. And that gives you sort of a slope situation. So the bigger the number, the higher the slope. So if you sort the column, so instead of, like, if you look at percent change, right? A lot of times you might be tempted just to look at what's going up the most, but a lot of times that might be, too late, or it's gone up a lot, and it doesn't really tell you much about what's happening with the chart. So this chart tells you about the slope. That's like the kind of the steeper type slope. So basically that could give you an indication, because if you look at when the slope is flat, you see here, nothing much is happening. And once you start to see a steepening slope is where the things are moving. So it's just an idea that you can sort of focus on ones that are moving, and you don't have to go with the highest one, because sometimes they're crazy, like the slope is insane, like it's parabolic, right? That doesn't necessarily mean that you buy it, but it gives you a sense of, like, if I go to this uptrending stocks, you have this 121, which is workhorse. You can see how it kind of went parabolic, right? And obviously you can still make money on this, but you got to be careful, like with stop losses and stuff. But then you get down to more reasonable, but these are nice slopes, they have a nice uptrending stock. So instead of looking like, if you were just looking at percent change, you just think, oh, this one's down, so you just skip it. But that's just like a minor blip on this uptrend. The other column I have just currently, I change things over time and look at different things, but this one is the close divided by the 8 average. So this shows you how far away is it from this moving average. So if you look at, I'm going to sort it by, workhorse is way here up off of the 8 EMA. So that's a highly risky scenario. So if you might be thinking, like, I don't want to buy stocks that are too high off the moving average. You can still do that, but you'd have to have a stop loss, probably up higher. but you can go down. So because I've sorted it by that value, you could find stocks that are maybe a little more reasonable in terms of their proximity to the moving average. So you can see here Peloton, like if you're, a lot of times you'll buy up here and then you'll see it kind of come down, or buy this one. So now you're like closer to the moving average. So if you kind of want to buy things closer to the trend line or the moving day, the EMA, you can write a formula to say, find the distance from the stock, the price to a moving average. So it doesn't mean necessarily buy here because it's in a bit of a downslope, but if you start to see it go back up again, that could be a chance. So, and there's a million things you can do, and you don't always have to write formulas. You can do conditions based off of values on this chart. So if you look here, up here, if I have this moving average 8-day, if I click on the arrow, I can create a condition here, and I could say, instead of greater than, there's a whole bunch of options here. So I could say when the price crosses up over the 8 EMA, or all sorts of different averages, moving averages here, and the volatility stops. So anything that you have on here become items that you can compare or decide. So I could say when the 8 crosses the 50, or when the price goes above the 8, or there's a million different scenarios. So for each of these, there's like a drop down. And so I really liked TC2000. It's got an amazing set of tools that you can use and drawing and stuff like that. So if you want to pick it up, there's a free trial link in the description below, and there's also $25 off if you decide to pick it up. And there's also a couple of courses, and there's a chat room. So I learned a lot about candlesticks from Steve Bigelow, and there's a link to his website where there's a chat room every day. And also there's a course on trading, which gets into the signals to buy and sell, and the moving averages, and indicators that you can use. And I think it's valuable to get a good foundation for yourself to understand, how you want to trade and what the methodology is for technical analysis and stuff. And you can do this like swing trading, where you're holding for long periods of time as well. So it's not just about day trading. So hopefully you guys check those links out in the description, and we'll talk to you in the next video.